If you're an income investor who loves high-yield opportunities, buckle up, because combining MST by Defiance ETFs with MSTY by YieldMax might just be the most powerful dividend strategy of 2025. We're talking about a potential game-changing 200 IQ move for those who want both weekly and monthly income, combined with serious growth potential. Let's break this all down in detail, covering everything from how the ETFs work, what makes them different, why combining them can work for you, and how you might want to position them in your portfolio. Meet the power players, MST and MSTY. MSTY is YieldMax's covered call ETF that delivers monthly dividends using MicroStrategy, MSTR, as its underlying asset. It sells call options to generate income, which is a tried-and-true strategy, but it sacrifices upside potential because when MSTR rallies, the gains are capped by the strike prices of those calls. Now enter MST, Defiance's newest ETF innovation, which offers something that most high-income funds don't: weekly dividends and leverage-enhanced growth. MST doesn't use standard covered calls. Instead, it uses credit spreads and swaps, giving you a position that has the potential to outperform MSTR by 1.5x to 2x daily, while still harvesting income from the volatility of the underlying asset. MST and MSTY are like cousins with different talents. One is steady and consistent MST, the other is aggressive and high-octane MST. When combined, they give you a diversified income stream and the chance to juice your total returns. Why MST might be the most underrated weekly dividend. ETF MST offers exposure to MicroStrategy with 1.5x to 2x leverage, which can significantly amplify returns when MSTR is in an uptrend. But what makes it special is the use of credit spreads, rather than naked calls. Credit spreads help maximize upside while keeping risk more defined. When MSTR is volatile, which is often, especially since it's heavily tied to Bitcoin, MST generates impressive income. In fact, recent data shows MST has had weeks with annualized yields north of 78%, based on implied volatility, IV. Think about that. A traditional income ETF might yield 5–10% annually, while MST has already distributed yields approaching 80% depending on market conditions. But there's a caveat: MST is not for passive investors. Since it's a leveraged ETF, it performs best in a trending market, especially an upward one. If the market is choppy or range-bound, the daily resets of leverage can lead to performance decay, even if the underlying stock doesn't change much. How MSTY and MST work together. Let's imagine you're building a dividend strategy based around MicroStrategy exposure. MSTY offers monthly income with a more stable, covered call structure, ideal for consistent cash flow. MST, on the other hand, gives you weekly income and greater upside through leverage. By combining both, you smooth out the income frequency and diversify your risk profile. While MST might dip more in a downturn, MSTY can offer more defensive stability due to its capped risk-covered call structure. MSTY can act as the cushion, while MST is your offensive engine. This combo allows you to potentially collect 4 weekly dividends from MST, 1 monthly dividend from MSTY. That's 5 dividend events in a typical month. For investors aiming to generate frequent, reliable income, this cadence can be ideal, especially those using income to pay expenses or reinvest on a regular schedule. Since MST has 1.5x to 2x leverage on MSTR, when MSTR falls 10%, MST could fall 15–20%. That's the inherent risk of leveraged ETFs. But here's where the income helps. Suppose MSTR is down 8% in a month, and MST distributes 6% in income that month. Your total return loss is muted. Instead of being down 16%, you might be down only 10%, assuming you reinvest or use that income to offset. This is the essence of how options income can buffer downside risk. It doesn't make it risk-free, but it can reduce volatility. MST isn't for everyone, and Sylvia Jablonski, CEO and CIO of Defiance ETFs, is transparent about that. Are bullish on MicroStrategy and Bitcoin. Want enhanced income from option premiums, can actively monitor their positions, understand leveraged ETF behavior. If you fit this description, MST might be one of the most exciting tools in your dividend arsenal. For more conservative investors, MST might be a better standalone product. You might ask, why not just go full 2x all the time? Why the range? According to Defiance, the leverage target is dynamically adjusted based on market capacity and swap availability. On some days, 2x is possible. On others, 1.5x is the safer, more efficient route. This makes MST slightly more adaptable than some pure 2x ETFs like MSTX. which focuses entirely on maximizing leverage without providing income. So again, MST is about balance. You get leverage, but not too much. You get income, but not at the cost of capping all your upside. Most income ETFs rely on covered calls, which involve selling options against owned shares. The downside? You cap your gains and often miss out on upside runs. MST uses credit spreads, which are more complex but allow for defined risk exposure, higher upside capture, and more flexible positioning in volatile markets. This makes MST more suitable for growth-oriented income investors who don't want to completely forego capital appreciation. We're seeing a huge surge in popularity around income-focused ETFs. Names like MSTY, YMAX, JEPI, and even newer entries like MSI are exploding in AUM, because in a world where cash yields 5%, retail investors have become more sophisticated. They're no longer satisfied with just passive equity appreciation. They want cash flow. As Sylvia Jablonski points out, many investors, especially younger ones, are seeking ways to supplement their incomes, travel more, or fund early retirement. Weekly and monthly dividend ETFs provide alternative paychecks without needing to liquidate positions. DRIP strategy, automatically reinvesting weekly dividends to amplify compounding. Buy the dip, waiting for MSTR drops to scoop up discounted MST shares. Trading volatility, buying MST during high IV periods for massive income bursts. Pairing with MSTY for a balanced risk-income approach. Each strategy has its pros and cons, but they all share a common thread. MST is not meant to be blindly held. It requires awareness, timing, and conviction. While MST's AUM is currently around $80 million, Defiance confirms there's no liquidity concern. That's because the underlying stock, MicroStrategy, is highly liquid. And so are the swaps used to construct MST. ETF liquidity is often misunderstood. What matters is not just trading volume but underlying asset liquidity. In this case, with billions of dollars tied to MSTR and related ETFs, MST can be created and redeemed efficiently. So investors shouldn't be scared off by low AUM numbers, especially since this is a new product already gaining traction. Some investors might look at MST's estimated 70% plus yield and compare it to 90-100% income funds and ask, is MST really worth it? That's short-sighted. MST's final yield will depend on volatility, MSTR price trends, and option premiums. It could well end up as the top-performing income product of the year, especially when you factor in total return. In fact, investors are increasingly pairing MST with higher-yield products to balance risk and performance. You might allocate 50% to MST and 50% to a product like YMAX or MST to capture a blend of weekly plus monthly income. Active management in this context doesn't mean Defiance is actively trading MSTR shares. It means you, the investor, need to actively manage your exposure. Why? Leveraged ETFs reset daily, range-bound markets can lead to decay, trends drive gains, but volatility can eat performance. So MST is a tool, not a long-term buy-and-forget ETF. Use it tactically, monitor your thesis, adjust your allocation when needed. Interestingly, many investors don't realize that MicroStrategy is one of the most Bitcoin-leveraged companies in the public market. So MST, in many ways, is like holding leveraged Bitcoin exposure with income. If you believe Bitcoin could hit $100K, or even climb steadily from here, then MST could offer outsized gains. It may outperform Bitcoin itself, given how MSTR often acts like a 1.52x version of BTC. MST then stacks on additional leverage, giving you exposure to amplified Bitcoin trends plus income. It's a bold bet, but one that could pay handsomely. Defiance says investors are asking for more. First it was quarterly income, then monthly, now weekly. Could daily dividends be next? While technically possible, the logistics, clearing, reporting, operational workflows are still a challenge. But Defiance doesn't rule it out in the future. The point is, investors are speaking, and ETF issuers are listening. Combining MST plus MSTY offers a unique mix of weekly and monthly income, growth potential through leverage, downside buffer via option premiums, tactical tools for aggressive traders. It's not for the faint of heart, but for those who understand the risks and know how to wield them, this strategy could be one of the most exciting developments in ETF income investing. So if you want a front-row seat to MicroStrategy's wild ride, with the added bonus of multiple dividend checks, MST and MSTY might just be your dream team. Just remember, manage it, monitor it. But most of all, use it strategically. Thanks for watching. Crush it in the markets, and we'll see you in the next update.